Right, so now we can move. Let's assume we've got our grant and we're moving now to the administration period. Now, of course, you don't have to have a grant to receive income, but I've put the income receipt as part of the administration period because that seems a sensible place to have it. Let's look and see how we do that. So the first thing I'm going to do is record income from investments. Now, let's assume that the receipt of this one, let's just say, is the 30th of December 2016. Let's say we received 1492, and this was paid into the account into which it's paid. Let's assume for now that this is going to be Mr. Goldfinger's income account, and we can check to see which share that related to. Well, this is relating to the universal exports. You may remember that we had a dividend due from that. That's now been paid in. I'm going to do one other example here, and let's say that this also came in the end of the year. Let's see, I put that 2016, that should be 2015. So you can see you can change any of these things. If you spot a mistake, you can change it very easily just by going back and typing over, just as you would with Excel. And you can see all that you've done previously. So that's again received into the income account, and that is relates to the Spectre Nuclear income. That's how you would record dividends. If you wanted to record income received on cash deposits, same sort of picture. Let's say that we're going to have some in different tax years, so you can see how that works. Let's say that we had a payment in 25th March 2015. There's no like that. No, I think that's because I've said 25th of March 2015, which, if I remember, actually is before he died, so that's not going to work, is it? So let's retry that. 25th of March 2016. That seems to be okay. And let's say this is 3250, and this is in the sheaf deposit account. And this, we're going to say we determine whether it's going to be net or gross, and in this case it's net. And let's do the same. So then we get 25th of June 2016. It's paid quarterly, it would seem. And again, that's net. And we've also got sorry. Let's have slightly out of order this, but nevertheless you can see what I'm about. This is, let's see, I was going to do, come on. Client deposit account, interest, gross. So that's how you would record income. And what we can now do is have a look at the income account, see how that's shaping up. Ignore all this over here, but you can see that we've got dividends. This is in the year to 5th April 2016. Dividends, taxed interest, that's from the bank, loan stock, and untaxed interest, that's gross interest. 2004. Oh, no, that is the tax on the untaxed interest, £2,400. So that leaves us a net income of 14,342 for that year. And then if we look at the following year, where we also had money in from Le Chiffre and we also had our current account interest. And here we've got a different year because we're in 2017, 16, 17, so we've got a different way of accounting for tax. So dividends will be taking off 7.5. So that's also showing that the tax on the interest is that. That gives us our total amount of income for that year, 3,500. Total income for the period, and the total tax due for the period, which is the sum of those figures. It's all worked out for you.